So we're very fortunate to have Michael Roberts and Hillel Ticktin with us today to debate the causes of capitalist crisis and how our understanding of crisis informs our activity as socialists. So the format for today is each speaker has 30 minutes, and then we will have a kind of general discussion in the room, and you can direct questions at either or both speakers. And then as it's a small group, we can see how we go. If people want a break, we can take a break and come back, or we can just kind of plough through. Just for, in the way of introduction, just a few kind of biographical words. Michael Roberts works in the City of London as an economist. He writes the blog The Next Recession, which is quite well read, and published, I think, a few years ago now, The Great Recession, which has been quite an influential work on the left. Hillel Ticktin is the Emeritus Professor of Marx at the University of Glasgow. Is the founder and editor of the Journal of Socialist Theory. So we're very lucky to have both of them here to discuss this. So without any further ado, I think I'll pass over to Michael and you can start.
Well, comrades, I know it's a small attendance. We could just about fit into the proverbial stagecoach. However, remember the stagecoach did deliver later on, so it's not going to be hopefully a waste of time for us to discuss the question, a very important question about what causes regular and recurring crises under capitalism. Now, probably most of you may, as the chair has pointed out who I am, but I still work in the City of London, so in the heart of the entrails of finance, with regular discussions every day about whether Trump's a disaster or not, or whether the dollar's going to go up or down. So I'm debating these issues, and even sometimes we discuss the question of whether there should be crises and what form these crises would take. Now, I'm not an academic. I studied economics degree and postgraduate level, then I took various jobs and was an activist, really, in the movement, in the days when I was a little younger. And in those days, I was an activist and worked in various investment organisations, in big banks too, and now in more consultancies. So I've never been an academic. In some ways, I think that may be an advantage. I noticed in this excellent book by Francis Wheen on Marx's Capital, which is one short version of how Marx wrote Capital and what he said in it. This will save you quite a bit of time, and it's an easy read. And he said, you quoted Marx after he finished his degree. He said he thought of becoming an academic, but he decided against it because who would want to have to talk always with intellectual skunks, with people who study only for the purpose of finding new dead ends in every corner of the world? That may be a little unfair on the Marxists, the small number of Marxist academics we have, but those of us like Hillel who've worked in academia will no doubt concur with Marx's comment when looking at the rest of the people in the university. So I think there's a certain advantage in having been, as it were, working in the entrails of finance. There are disadvantages in that, although you maybe have mammon, you don't also have to put the hours in. And so that could be the other side of the coin. But to the matter at hand, I want to bring, before we discuss maybe the differences or the general ideas that Marx had for a theories of crisis under capitalism, I feel I have to point out what the mainstream bourgeois views are on crises, partly to explain how inadequate they are, and partly for some degree of amusement for us today. Niels Bohr, who was a famous physicist, once said that, it's a general quote, predictions can be very difficult, especially if it's about the future. It's a well-known quote and I love it, and in a way this is the basis of what we can look at, the ability of mainstream economics to forecast what are quite clearly and evidently regular and recurring crises under capitalism, culminating in our lifetime in the Great Recession of 2008-9, the largest slump since the 1930s in capitalist production and incomes and employment, a major event which mainstream economics bourgeois economics has completely failed to forecast, understand why, or explain and have any idea of how to get out of it. Let me quote Alan Greenspan, who was head of the Federal Reserve at the beginning of this century, said, "I have been forecasting for 50 years, and I have not seen any improvement in our capability of forecasting." How true that turned out to be. The key economic advisor to Obama said, "Economists cannot predict recessions and economic discontinuities because they are inherently unpredictable. It's impossible to see the shocks coming." This is the level of mainstream economics. It doesn't go beyond the officials. Former Prime Minister in the Union, David Cameron, said, just before the crash, "The world economy is more stable than for a generation. Our hugely sophisticated financial markets match funds with ideas better than ever before." The head of the Bank of England said in 2007, just before the crash, "It's quite possible that at some point we may get an odd quarter or two of negative growth, but recession is completely ruled out." This is 6 months before the crash. Donald Luskin, a leading advisor in the American government at the time, anyone who says, this is in 2008, anyone who says we're in a recession or heading into one, especially the worst one since the Great Depression, is making up his own private definition of recession. Well, it became public later on. George Bush said right in the middle of the crisis, "We can have confidence in the long-term foundation of our economy. I think the system is basically sound, I truly do." And his successor, John McCain, as candidate, said, "The fundamentals of America's economy are strong." This is in 2008, just before losing the election to Obama, and then we had the financial crash. After the crash, only 12 months after, Greenspan said to the Congress, "I'm in a state of shocked disbelief. In other words, my view of the world, my ideology was not right. It was not working. Absolutely. Precisely, I'm shocked because I've been going on for 40 years or more about the evidence that it was working well." So for Greenspan, what happened was a chance in 1,100. It was a 1 in billion, Taleb, a statistician in America, said. The chance of this Great Recession was 1 in 1 billion. In other words, it was just a random event with no explanation really, it just took place. Hank Paulson, who you may remember became the Treasury Secretary during the crisis under Bush to give $700 trillion in funding to the banks, said, "This sort of thing only happens once or twice in 100 years. Well, there's some truth in that. One economist commented, "The chance explanation of the crisis, what's the difference between once or twice? $7 trillion in losses," said that economist, which is very true. There was a big difference between every time that does happen. So the idea that mainstream economics was expecting this or understood why it was happening is clearly wrong. Ben Bernanke, who then became the head of the Fed, said in 2002, when referring to the great economist Milton Friedman, who was his mentor, "You are right, the US had a Great Depression, but thanks to you, Milton, we won't do again in 2002. Mr. Bernanke, the former head of the economics department, somebody said, knows all there is to know about a depression. He was an expert on the Great Depression, except what causes them." And of course he went on to say, "But I have to get to the most amusing bit, which is the main theoretical economist, the neoclassical economist, Robert Lucas, who is a Nobel Prize winner." By the way, there aren't any Nobel Prizes in economics. Nobel awards a prize given by the Swedish bank Riksbank, who finances it. Nobel only wanted peace prizes and literature prizes. The bankers came up with the idea of taking economics and making it a Nobel Prize. Anyway, Robert Lucas said in 2003, "The central problem of depression prevention has been solved." Olivier Blanchard, former head of the IMF, said just before the crash, "The state of macroeconomics is good." Eugene Farmer, another Nobel Prize winner, the author of the idea that markets are so efficient that they can never cause a problem. It's called the efficient markets hypothesis. "We don't know what causes recession," says Eugene. "I'm not a macroeconomist, so I don't feel particularly bad about that. We've never known. Debates go on to say what caused the Great Depression. Economics is not very good at explaining swings in economic activity. I don't know which way things are going to go. If I could have predicted the crisis, I would have. I don't see it. I'd love to know more about what causes crises. This is the Nobel Prize winner in economics. John Cochrane said, the central prediction of this efficient markets hypothesis is that precisely nobody can tell where markets are going. And that's a fantastic theory, isn't it? Neither benevolent bureaucrats, nor crafty fund managers, nor ivory tower academics, of which he was one. This is the best tested proposition in all sciences that we know nothing. A brilliant thesis, Nobel Prize winner. Robert Lucas, this is great. Robert Lucas, Nobel Prize winner, when asked about his forecasts and the crash, he said, the simulations were not presented as assurances that no crisis would occur, but as a forecast of what could be expected to occur, conditional on a crisis not occurring. Have you got that? Beautiful. This is much more amusing than, unfortunately, the rest of our debate, but nevertheless, it is amusing to see that basically bourgeois economics has no idea what causes crises, self-evident to everybody, and recurring, and has no interest in finding out. And there's obviously a very good reason for that, because to find out would lead to the question of whether they're in a society or a mode of production or social relations of production which are antagonistic and against the interests of the majority of people. Briefly, now there are all kinds of other alternatives within the mainstream economics which does attempt to look at the nature of the causes of crisis. Keynes, of course, is the famous one in the 1930s. And basically the theory of Keynes, very shorthand, and no doubt Hillel will correct me if I'm getting it a little bit too simplistic, but basically what Keynes said was, what causes crises is a lack of effective demand, that basically there isn't enough spending going on, either by capitalists investing or by workers spending to buy goods, and as a result of a collapse in demand, and employment goes down, income goes down, profits go down, and we end up in a recession which you can't get out of because finance sector is blocking it by holding interest rates up too high. But it can be solved, said Keynes. Either we drive interest rates down to zero, get the banks to do that, or the public sector, spends money and borrows to do so, or whatever, to drive up spending artificially that way. And if we get prices up, maybe that will also squeeze real wages down, which will also be helpful. So it's just a technical problem. He said, Paul Krugman, the guru of Keynes economics, now said, the point is that the problem is not with the economic engine, capitalism, which is as powerful as ever. Instead, we are talking about what is basically a technical problem, a problem of organisation and coordination. We've got in a colossal muddle, as Keynes described it. Solve this economic problem and the economy will roar back to life, said Krugman in 2009. Well, I'm afraid over the last 7 years it hasn't roared much, despite the efforts of Keynes's policies in terms of easy money at zero interest rates or even negative rates, huge injections of money by the central bank, fiscal spending in various countries to try and boost the economy. The Donald is now planning a new bout of fiscal spending, claiming it will take the economy in the US to grow at 4% a year. But none of these policies have worked. So we come to what did Marx say about the nature of capitalist crisis. Now, this is somewhat of a debate amongst Marxist economists. Some people say that Marx doesn't have a theory of crisis, because he never completed all his works, he never clarified them. A lot of the notes had to be put together by Engels and others into the 3 or 4 volumes of Capital, and it's difficult. There is no coherent theory of crisis in Marx's works. I don't agree with that. I think we can discern such a coherent theory of crisis, but there are interpretations of what that theory of crisis is. In my view, it's that, and I will quote here from Marx, it said that overproduction, he said that overproduction is the nature of the crisis. People no longer buy the goods, capitalists want to sell and they can't buy it. That's the slump. How do we get to that point is the issue of debate. There are three alternative explanations provided within Marx's works, and Marxist economists various take one or the other. One is similar to the Keynesian position, is that the cause of economic crises is that capitalism expands and accumulates and develops investment goods, and it holds down workers' wages, so workers cannot buy all the goods that capitalists produce. There's an inherent process of underconsumption in capitalism, and this leads at a certain point to a crash and a slump. Similar version out the other side of the coin of that is that there's a disproportion between the expansion under capitalism, producing goods, factories, machinery, and the end user, the working class, the goods that they require, consumer goods. So there's a disproportion between capitalist goods and consumer goods. And it's anarchic, an anarchy of production. It's not controlled, managed, they're not in the interests of the people, and it's out of control because capitalists are competing against each other. So there's an anarchy in production, a disproportion, and this at certain points causes a crash. Now, both of those have a certain element of truth, but they don't really tell us why a crisis takes place at this time, or why it should take place at all. It just says that there is a disproportion between workers' ability to buy, or there's a disproportion between capitalist expansion and the realization of that in profits and money. I think the only way that we can really understand the process of production and the reason for crisis under capitalism is to look at one of Marx's basic discovery and analysis of the nature of capitalist production. Capitalist production is not to produce things that people need, consumer goods or capitalist goods even for the capitalists. It is to make profit. It's a money-making mode of production. Money is invested in people to work in machinery and mechanization for them to use, and raw materials to produce something that people will buy for money to make a profit. So it's money to make more money. It's a money-making proposition. For bankers, they don't even care about the production. They just give you the money and they expect the interest. It's money to money. The whole process is simple for them. But the majority of capitalist production is about putting workers to work, exploiting them with machinery and other things to produce more money. Not necessarily what people, not the majority need anyway, it is to create more money. So the essence of it is making profit. And therefore, crises under capitalism only take place if that profit is not realised and not delivered over a process of time. And Marx says we can see an inherent contradiction in the capitalist process of production between the drive to increase the productivity of labour and produce more goods and the ability to get more profit out of it. He said there was a tendency for this profitability of investment, of capital, to fall over a period of time. Why? Because only labour creates the value of this profit, and in the process of increasing and competing with each other, capitalists are forced to mechanise, which is their dynamic process of taking productivity of labour forward, but as they mechanise, they increase the cost of their machinery, their equipment, raw materials, relative to the amount they spend on labour. So there is a period of tendency for the profitability to fall because labour's share in creating value is falling relative to the costs that the capitalists are having to invest in competition. This tendency can be counteracted by many factors. We can exploit the workers more. We can find machinery which is even cheaper than we had before, so we can keep the costs down. These are two major ways. We can export abroad if the profitability is not good at home. We can speculate in the financial market if the profitability in the productive sector is poor. There's many ways in which this can be counteracted for a period of time. But the tendency is too great and will overcome the counter-tendency, which is why Marx poses dialectically like that. Tendency is the dominant thing. The counter-tendencies, which I've just described briefly, can alleviate that, curb it, hold it back for a period of time, but they will inevitably, the process of the tendency of the rate of profit to fall will be delivered in a fall in the rate of profit. If I take this, if the rate of profit falls for the overall investment I've made, then even though I'm making more profits, because there's a rate of profit, it's beginning to fall. And at a certain point, the next investment will mean I'll make no profit at all. It's not worth doing at all. And the very weakest capitalists get into this position where they start making losses. And then the process cascades through the whole system. Once they make losses, they lay off, they stop investing, they stop buying goods, they lay off their workers, or they get taken over, and then we get a slump that spreads across the economy. So profits lead to less investment, lead to less employment, lead to less income, and then workers don't have money to buy back their own goods, and capitalists can't sell all the goods they've got. So we get the slump. A slump is when workers can't buy anything because they're unemployed, or they've had their wages reduced, and capitalists can't sell what they've got because they've got too much compared to what can be bought. That has happened through the process of this law of the tendency of rates of profit to fall. Now, that has a very important, that particular explanation of crisis has a very important thing, because it's saying to us that it's not a technical problem, as Keynes said, or Krugman said, that just requires us to spend more money through government or to cut interest rates. It's an inherent contradiction in capitalism that cannot be resolved except by a slump. You have a slump, it reduces the investment in workers, a lot of machinery is written off, dead capital. Don't have to tell you about the traditional industries of Glasgow. They've been wiped out as a process of a series of slumps over several years, and you have a reorganisation of capital with a higher rate of profit, but with perhaps new forms of capital being taken up with new technology, and then the process starts again. Or as Marx described it, the whole crap starts again. So you're up again for a period of time, could be a generation, interspersed with little crises and so on. Now, in my book, The Long Depression, I suggest there's a difference in some of these booms and slumps between a recession, like we have a normal period of booms and slumps every 8 to 10 years in modern capitalism now, and a depression, which are much more serious situations, which only happen every so often. And in the book I argue there's only been 3 times. The late 19th century, where we had what was called a long depression at the time, went on with booms in it and slumps in it, from about 1873 up until the 1890s in most of the major economies from different degrees. And of course the Great Depression from 1929 to the Second World War, which called the Great Depression, a huge depression in most of the major capitalist economies, in all of them in fact, a mild recovery and then a further depression, only war entering that. I think the period we've had since 2008 is a similar one. It's a long depression. We're in a period where the rate of profit has been lowered quite a lot. We've had a huge slump. It got profits back up again, and profitability up in some countries, but according to my measures, most countries' profitability of capital is still below where it was in 2007, and in many cases where it was below at the end of the 1990s, after the high-tech revolution came to end in industry. So profitability is still low. This slump, which was huge, hasn't created a sufficient rise in profitability. We have loads of what are called zombie companies that just make enough profit to pay the interest on the debt that they've borrowed over the previous years. And so these companies are zombies. They don't invest, they don't introduce new technology. So when we look at the big companies like Apple and Google making huge profits and stashing them up and all the rest of it, that's a tiny minority of the overall capitalist economic sector. And it's not surprising that the very smallest ones are the ones that have had, as it were, given some political support to the opposition to Wall Street and to the City of London, and the big capital, a split has developed because there's this layer of smaller companies that are going nowhere because profit remains low. There still needs to be, as some capitalist economists have argued, a cleansing out of the system to get rid of these small companies to create new conditions for a higher level of profitability, more concentration of capital in the better sectors of the world economy. So, in my book I'm saying that we're in this third long depression that we haven't seen in the history of capitalism over the past 150 years, and that this third one will not really be ended until we have a further cleansing out, probably another slump before the end of this decade, before 2020, to create the conditions for increased profitability and therefore to allow the whole crap to start again, perhaps for a more healthy period, maybe 10, 15 years, if that takes place. Now, yeah, so that's the cause of, well, where's the workers in all this, you might say? Well, I think that this is an interesting discussion, which no doubt we'll get into. That I like to look at the objective situation first, and say to ourselves, what's going on in the world capitalist economy? What's going on with the capitalist mode of production? Is it healthy? Is it in difficulty? What form of difficulty does it take? My book tries to describe that. And I think in order to understand that, health of capitalism depends on the profitability of capital. It's a very simple statement. That's healthy. If profitability is good, profits are improving and profitability is improving on a sustained basis, capitalism is relatively healthy. That was certainly the case in the period from about 1946-48 to 64, the so-called golden age, when I left school and go to college. When we went to college back in those days, full employment, relatively. I went to college and it was no fees, grants, no other costs to worry about. When we finished our courses, we didn't think about getting a job. There's plenty of jobs. We thought about how to change the world, or some of us did anyway. We didn't worry about a job. We could go out and get a job. I got a job, or any old job in my case. Other people who were interested in jobs weren't interested in going into banks. They're interested in going to public service. They wanted to be teachers and educationists and health people and medicine. There was a public spirit. I'm not exaggerating to say that that was the mood of 18 to 20-year-olds at the time when there was full employment. We had a so-called welfare state and all the other things. That was such a small period in the history of capitalism, over in a generation from that period on. But that period was when profitability of capital in all the major economies was massively high after the Second World War. Since then, there's been a secular decline in the rate of profit. And I see now that we're now at low levels for the level of profitability. And we know what's happened in order to counteract that by capital around the world. They've crushed the trade unions, they've privatised the welfare state and continue to do so. They deregulated the banks, they expanded the export of capital to globalise and exploit the rest of the world. They made lots of things to try and turn that rate of profit around, particularly from the period of the early 1980s up to the end of the 20th century, that period, that gap. When profitability was at an all-time low in 1982 in most countries, and then we see a rise in the profitability. Relatively small, I haven't got the diagrams to show you, but relatively small, but a recovery. From about the end of the 20th century to now, that profitability has now stagnated and in many countries has fallen. With the Great Recession, has taken another hit down. We're in a very bad period for capitalism. It's not healthy. It's not recovering well. It needs some more cleansing if it's to get going. In that situation, that period from the 80s to 2000, the working class took a hit after hit after hit in the advanced countries, and in the so-called emerging economies, they exploited at a tremendous level. Many of them came into the world capitalist economy for the first time, and we've seen a rise. It's worth remembering. Some people say, no, the working class is dead. I said, well, actually, the working class has never been larger. Globally, it's never been larger. In countries like India, China, Indonesia, parts of Brazil, so on, massive increase in the urban proletariat. Now, the world is more urban than it ever used to be, more proletarian than it ever used to be. May not be so much in the advanced countries in the industrial sense. Of course, there's still workers don't have to work in industry to be workers, but that's the change that we've seen in this period of the last 30 years. But in the major economies, the working class has been crushed in its powers of organisation. So we haven't seen a reaction against this situation. Capitalism is unhealthy, the working class has not been able to react to that in many effective ways. We see what has happened politically as a result, with people diverted in other directions towards trying to solve this problem. Yes, the class struggle, it doesn't disappear. What we need is an objective analysis of what's going on in the world economy and to understand the causes of the crisis so we know where we are, and then we can judge better and have a perspective of what the prospects are for changing that, and therefore to understand why maybe the working class hasn't struggled as we might have expected in places like here, to understand what has gone on. And that's the purpose, I think, of trying to analyse things. And I think it can be analysed, and it can be measured to a degree. Marx always attempted to measure these things and to analyse why the crises, and to try to measure the nature of the crisis, and even to see the cyclical nature of it. If you read his works, he attempted to do that. He didn't have the data that we do now. The data is suspect, it's true, but it's the job of decent economists and statisticians to look at it and try and analyse it from the categories. So, in summary, we have a capitalist mode of production which is for profit. Profitability is the key to understanding the process of the causes of crises. When profitability is driven down, and therefore the massive profits go down, we have crises. And it is a cyclical process, because the slump causes a revival of capitalism, and then it goes forward again with a new level of profitability for a while. We have to analyse the process, and that, my book tries to do that, of what sort of process what sort of stage we're in that process, that cycle continually going on. But what it does show is that each recovery is getting more and more difficult for capitalism. It's really an unhealthy situation. Capitalism is a system that cannot last in taking people forward, in the productive forces forward, and moving us to a world of leisure. I'll finish on this point, Chair. John Maynard Keynes in 1931 had a speech, a lecture at the University of Cambridge to his students. This is in the depth of the recession, of the world depression, the Great Depression. He was worried that because the capitalism was failing, that his students would be open to the ideas of communism and Marxism. That's specifically why he called the lecture. And he was right, because many of them went on to be spies. But he said to his students, he said, look, I know the things are a terrible mess now, but the technology's there, capitalism will get out of this, and the technology will take us forward, and we'll move to a world where there will be a 15-hour working week, and the problem will not be how to make ends meet. The problem will be how to use our leisure. This is going to happen, he said, before the end of this century, before you guys, your grandchildren, he said, will be living in this environment. Well, unfortunately, that didn't turn out to be the case, much as we'd have liked it. And of course, he was only referring to Britain and America, not the rest of the world. And he didn't mention inequality and any of the other things. But here we are again. Capitalists have no answer to the question, but capitalism cannot move to the position of a world of leisure, of a 15-hour week, of using the robots and automation in the interest of everybody. Robots and automation will be used in the interest of capital to try and drive up profitability, although it's a contradiction, and they will also create the conditions for a further struggle ahead for the working class against the control of capital.
Well, general underpinnings, of course, I agree with Michael. But the overall result is somewhat different. We agree on the three Great Depressions, absolutely. But his criticism of bourgeois economics could be extended to Marxists, effectively. Bourgeois economics in general takes the view that it can't say anything about the crises, inflation, anything social. It consciously does that in undergraduate classes. That's what a lecturer will say. So, in a sense, it can't be blamed because it doesn't claim to know anything or be able to predict anything, because it really doesn't know anything. And it's hard, therefore, to actually criticize them, because they don't say anything, really. In the end, they're useless. When the Queen asked them, they had no answer either. It's true, they know nothing. It is completely useless as a subject. It is effectively pure ideology. Yeah. So we agree. However, if we turn to the Marxists, the history of Marxist prediction on crises in this country is almost as bad, I have to say, all the world. After the war, after 1945, Eugene Varga, whom some of you may know, said there were not going to be crises. At the time, Eugene Varga was Hungarian who took part in the revolution of 1919 and had gone to Russia to escape the changes which happened with the defeat of the revolution in Hungary. And he was and had become a Stalinist economist, justifying Stalinism. So he came out with this rather obvious viewpoint, obviously based on Keynesianism, but fundamentally correct, because what he said was, now that they are going to take charge of the state in relation to investment, there are not going to be immediate crises. Well, he generalized it in more or less forever, I think. So in that respect, he was wrong. But in the immediate future, he was correct. Stalin duly dealt with him. That became the line among the communist parties, effectively. But it wasn't only the communist parties, because the left, that's to say Trotskyist left, because there is no other left, after the war was expecting a crisis. And it didn't happen. The WRP, of course, remained clear that it was going to be a crisis to the end, and they were expecting it any day. The day never came, of course, as long as it existed. But if you then look at Mandel and Tony Cliff, the SWP and the IMG here, their line, when no crisis came, was to adapt to it and say, there will be no crisis. That was their line, no crisis. It was simply, the revolution would happen simply because the working class was discontented. And that was basically what they were saying. So that was the beginning and end of it. And people might remember in 2007 or 6 or 7, I suppose, Chris Harman was saying there wouldn't be a crisis. So the left organizations, at least, failed completely in this respect. Their general analysis of the political economy was limited, one can say. It's not difficult to see what was happening, and I think in order to understand crises, we can't limit ourselves to looking at the schemes of reproduction. The three aspects which Michael has brought out, I completely agree. And in effect, there are four, the three taken as one. That's to say, one could argue that a crisis will occur when all three aspects are occurring. So, in other words, one can have, in terms of the schemes of reproduction, the falling rate of profit, you can argue that you have disproportionality, you can have underconsumption, and falling rate of profit. You could argue that the crisis is caused by one of them, two of them, all three of them. And so one has, therefore, a series of possibilities, and various people have argued them over time. I don't actually agree with Michael that the falling rate of profit is the basic cause. I don't even show it at the present time at all. As a matter of fact, if you just read the Financial Times day by day, which I presume you do, and I do.
Only online now.
Okay, only online. If one does, they give a consistent rate of profit in the United States of about 12%, and they've been arguing that it's not falling at all. Well, there's an overall problem. First, in terms of calculating it, given the fact that the rate of profit must apply not just to one country, because, say, take the United States, I think something like half the companies, the US Stock Exchange, have overseas earnings.
Yeah.
The consequence is that you'd be looking at the whole world, you'd be looking at the falling away of profit today. I think that is true in any case. We are globalized today, so it's not possible to argue it in any other form. That is extremely difficult then, to argue in terms for a proper rate of profit in factual terms. Secondly, you have a problem that the profits can often be hidden in various havens, which you all know about hundreds of times over. So the actual calculation, I think, is a waste of time. It's just not possible to do that and prove it. That doesn't say that it may not exist. In theoretical terms, the foreign rate of profit must apply over time. If you simply go through it over a long period of time, it must be true that the number of workers, or the quantity of value, let's say essentially history labor time, must go down, ultimately to the point of zero or near zero. But what happens in 20 or 40 years is not clear. And I wasn't altogether clear what Michael was actually saying about that. Because what there are is a number of variables which you can't predict as to what's exactly going to happen, like the ones he was talking about. Wages and productivity and the effect of productivity on the means of production. You can't actually predict exactly how it's going to shape at really one time. So it doesn't seem to me that one can simply argue that in those terms. However, there's no question that crises have occurred, and there have been three major crises which you refer to. But it seems to me we can't understand that simply in technical terms. The long depression of 1873 to roughly 1893 took place at a time when Marx was alive, and it's clear that he was influenced by it. And what is also clear about it is that exactly this period we have imperialism, if we follow Lenin. This is the date when we have imperialism. This is a time when Cecil Rhodes says either we have imperialism or we have civil war. So the rate of profit is effectively raised externally, the export of capital. And the downturn comes to an end. In the next period, we have the First World War and the Second World War, and then a long period of Cold War. It's not difficult to argue that those were the basic reasons why you had or didn't have a downturn. In other words, what has been crucial to maintaining capitalism without a crisis has been imperialism and World War. What goes with that is the nature of the political economy of capitalism itself. You can't talk about capitalism as if there is no politics at all, or as if there's no class struggle in which one side or other is getting, where the working class is either being repressed or concessions are being made to it. You can't talk of capitalism without looking at its decline and without looking at the political economic structure which has been erected. In other words, firstly, a crisis itself doesn't just come to an end. Historically, before 1870, you would have a crash in which the old capital would be partially wiped out. The period which Schumpeter made famous by talking of creative destruction, the idea which he got from Marx. That was absolutely essential to the crisis coming to an end. We can't have that today, and it wasn't an accident that we didn't have it. You can talk about it in various ways, but that's what took place, but it didn't. there was various aspects of restructuring, but the kind of devastation which used to take place in the 19th century before 1870 didn't take place. You had clearly in the Great Depression of 1929, you did, the United States Stock Exchange went down to 10% of what it was by 1933. But then you had a president who began to reverse things. And they didn't get out of it until the World War. The World War performed the function of destruction. But today we haven't had that destruction. It's hard to talk about it. And of course, the reason is they dare not do it. They couldn't do it from 1870s onward. After all, in this country, Disraeli consciously conceded to the skilled working class, gave the vote and built houses. The capitalist class has understood that it must find a way of existing with the working class and not one of permanent revolt. And if it was simply to go for mass unemployment on the scale of the Great Depression, 29 to 33, or in Germany where it had 6 million unemployed, it wouldn't survive. Or if it did survive, the only way it could do it is by using guns and mass imprisonment. So that isn't the road that it can take, and it's not taking it. And we haven't had that kind of mass destruction and mass unemployment at the present time. And as even in the Great Depression, they tried to reduce it. And they never got out of the Great Depression except through the World War. So effectively what we're talking about is a long period from the 1870s onwards of imperialism and war. But peculiarly for this whole period, we don't have a Cold War. And I don't think it's an accident that the Prime Minister of Britain wants to increase arms expenditure. It's been the traditional demand of conservative parties all throughout, although limited. The reduction in arms expenditure which took place in the United States between 1986 and 1997 was the first time they actually did it, and they did it to a colossal extent. It went down from something like 8.5% of GDP to around 3% of GDP by 1997. It began to be slightly increased by Clinton, but they're nowhere near where they were before in 1986, and obviously not what they were in the 1950s. So, or the 60s. So, what you've had, therefore, has been a period of relative stability until the present. The downturn of the present time, I think, has to be understood as beginning really somewhat before the usual time given. The crash in mortgages took place in July 2006, so it's effectively been there for 10 years. And they're clearly not getting out of it. But in fact, the stock exchange crashed first in 1987, and the state stepped in. They actually went to the stockbrokers, I suppose you know better than I do. Well, from what I gather, stockbrokers in the United States, speaking to them, or one of them, the state actually went to the stock exchange and said, we stand behind you, buy, which they did. And it didn't crash. The crash stopped, the downturn went on in 89. Until 93. That was a period in which was very shaky. Greenspan was very afraid at the time to raise interest rates. You remember there was tremendous discussion on it. And it duly crashed in March 2000. And they didn't get out of it really until the 9/11 event occurred, and they went to war and began to expend more money on war. But it was a brief blip, and then you get the downturn. So really, that's just the history of the thing. But really, one should be talking of it beginning with a crash of March 2000, with a slight turn up, and then when the effect of the Iraq War wore off, the crash came. Of course, it's more complicated than that. And the background to that, in turn, it seems to me to understand it, isn't a technical one. It is the strength of the working class showing itself in the period after the war, after 45, in which you had full employment and a welfare state. Capitalism can't accept a welfare state in full employment. Full employment, in principle, gives the working class a strength which they cannot resist. They are not going to reintroduce full employment. That's out of the question. So, in that, they learned, and Michael has referred to some of the strikes, the events of the 70s. There were mass strikes in many countries, in Germany, and of course Britain, elsewhere. The ruling class realized they couldn't continue with the old form.
Yeah.
If you remember, the rate of profit in Britain was down to about 1%, I think. They reversed line and went for finance capital, which is where we are. And it was in the form of finance capital, of course, that it crashed. I'm not going to go into detail of the thing, but we saw what had happened by the end of the century, with the long-term capital management crash, with the crash in East Asia and so forth. What happened was basically a shift. We can see the nature of it today if you look at the detail given by the Economist a few months ago, where they point out that on the New York Stock Exchange, 40% of the shares are held by the three biggest asset management companies, BlackRock, State Street, and Vanguard. Yeah, it's actually held just by three vast capitalist institutions in the United States, and that 40% holds 80% of the wealth. So, if effectively, to a degree which has never been the case, you have a degree of you have a monopoly control of the country. Of course, it's not 100%, and it's not straightforward. It's obviously contradictory and so forth. But nonetheless, it's a change in form, and give you some idea of the power of finance capital and necessarily of monopoly. I'd like to basically finish on this question of monopoly, which Michael didn't mention. I'm not clear what your viewpoint is on that. I'm saying that because, to my astonishment, there's a section of the left that takes the view that it doesn't exist. Anwar Shaikh has put this forward. He's a professor at the New School in New York. He belonged to before the National one time. I don't know if he does now.
No.
Anyway, he's put forward the view that monopoly doesn't exist, basically. Now, that today is the bourgeois economic viewpoint. And I couldn't understand it, I have to say, where it came from, why it suddenly emerged. When I was in university, there were textbooks on monopoly. But Paul Krugman explained it in one of his articles in the New York Times, where he said it came from Milton Friedman, who somehow managed to argue that one could drop the concept, which they've done. Now, the point about monopoly, if you define it not as just one firm, but a number of firms who reduce their level of competition, one or more firms who reduce the level of competition. The point of it is that they're able to control their production. Now, this is different from what Marx actually wrote. Marx, in Capital, is arguing, which was the classic line effectively, that you have a large number of, a considerable number of competitors, and they're competing in terms of their productivity. So they are developing new ways of producing the product, which are superior and cheaper to produce. And the one that does it best tends to win, or a number do. You can make it more sophisticated if you want. But that's basically what Marx was arguing, because that was what was being argued at the time. That is patently not true. You could hardly argue that was true of Rolls-Royce, one of Britain's biggest firms. In fact, I don't think Rolls-Royce got any competitor in Britain. It does in the United States. But it would be more usual to talk of a small number of firms, not just in one country any longer. Of course, this argument of monopoly is put forward by Hilferding, followed by Lenin. And what I'm saying is they were basically right, but it's changed in two ways. The first way in which it's changed is that it's now global. So Philip Nolan has written a book in which he brings this out. The book's called Why China Will Not Rule the World. But what he's dealing with to a large extent, is with monopoly. So he points out things like talking about the world. If you look at the industrial sector, say in large commercial aircraft, there are basically two firms who have 100% of the world market. There are 10 car firms in the who control 77% of the world market. In heavy and medium duty trucks, 5 firms control 100%, etc. You can just go through the different firms. If you look even at soft drinks, there are 5 firms who have over 50% of the world market. It's true in general that we have global monopoly today, not just national monopolies, but global monopolies. Okay, well, the point is that they can control production. If you can control production, let's say you can decide how much you're going to produce over a period of time. If you can do that, you're not going to overproduce. What happens is a gap between what you could produce and what you are producing, which is what has actually happened. What's actually happened is that, as opposed to enormous levels of cars outside on Clark, as it were, what you have is the potential to produce very many more cars. But not doing so because they know they won't sell. They first discover how many they're likely to sell and make to that. but it means that the potential production is very much greater than that. Now that changes, of course, the possibility of overproduction. What it means, and what goes with that, is that, of course, there isn't any question of creative destruction here, because there is no destruction possible. They continue to have their firms as they were. Secondly, it means they will not invest in that firm further than a certain level. They therefore effectively have to put it in the bank or find somewhere else to actually invest. But if that's generally true of the economy, then the best place they can do is put it in the bank. And that is exactly what has happened. Recently again, the economist, I think it was, noted in the Financial Times, pointed out that, and I've pointed this particular one out several times because you can just actually look it up on the net. The Bank of New York Mellon has $29 trillion, which it just holds. It just holds it. 29 trillion. And it's not the only bank with substantial holdings of money. They give an example of 3 banks, and when added together, it comes to something like 70 trillion, simply held in the bank. Now this is a reflection, of course, precisely of the depression that we are in. And while the figures are not the same, etc., during the Great Depression, it was also true that firms didn't invest, and they were saving their profits. What it means, of course, is that you have got to a point where capital is not capital. Capital put into a bank is money, but if it's not reinvested, it is not capital. That is true today. It's not that there may not be a high rate of profit, because they can maintain the rate of profit. As long as they don't build anything more, they can maintain the rate of profit. As long as the state continues, which it is continuing, even if in a worse form, continues to maintain some aspects of the welfare state, which in fact favours capital as a whole at some sort of level, they may have certain problems, but capitalism goes on. And they can ensure that their actual rate of profit doesn't go down by that much. However, of course, money in the bank isn't returning profits. And today, not only would the rate of interest be low, in a number of these banks it's actually negative. So in terms of their actual monetary holdings, their profits are going down. That's clearly true, because if you look at their total assets, their profits are going down. If you look at the actual investments, they're not going down. That's what I get from looking at the statistics. So I think the point I'm getting to, though I can't actually get to the end of it, is it's simple, and it is this. There is no end to this. There is no solution for capitalism. Capitalism, as it were, has reached a point where it has nowhere to turn. It will continue like this. There is no way out of where we are. What are they going to do? The logic of where they are is they can, of course, invest. They can let the world economy go to full employment. But they dare not do that. They don't want that. They're scared to do that. And they're quite rightly scared to do it, and they know it. So they're not going to do it. So if they're not going to do it, how are they going to get out of where they are? There is no way that they can get out of it. They're stuck where they are, and it will continue to muddle the way it's muddling now. And Trump is simply one example, which obviously the comparison with the 30s has some relevance, but though he's clearly not a fashion. But we can expect further change, possibly worse. But I can't see any way in which they can get out of this. It will continue like this, precisely because we're not in classic capitalism, as it were, where you could expect this kind of up and down aspect of it as in the 19th century. It'll continue along the lines of the present for a long time, until the working class is able to act, and I would expect that it would be able to act. Thank you.
Thank you to both our speakers for that. So we can open up to discussion now. As it's only a small group, then if you've got questions, and as I said, direct them to one or both of the speakers, and they can come back in. If you've got a contribution to make, if you could try and keep it to sort of on the right side of 5 minutes, then that would be appreciated. So, does anyone want to start the discussion?
The overall context of it, what the discussion took place is really a contradiction between the fossil production and the wasted production. That's the basic context. Now, I'm just wondering how that fits in your theory of profitability or whatever, right? Because clearly the forces of production are way beyond capital now. The social relations are a major contradiction with it, you know. The other question that to me is debt is right out. No one's mentioned debt. No, excuse me, also endemic finance capital produces debt, not a profit. Why?
That's Michael, a quick question. Paul's Michael, I bought your book, I've not read it, I'll read it out, right? See your
Usual story.
See an example of a zombie firm.
Yeah.
Could you give some examples of that? And what it strikes me that we quite get a kind of very empirical, basic impression of firms on a world scale as a small group of highly dynamic, highly profitable, so on and so forth, today, that with others. I think this fits in a bit with what Hillel is saying, in terms of the dominance of firms, the ability to control price, and so on and so forth. Give us examples of some of the kind of zombie type firms that just kind of continue but are going nowhere.
Yeah, well, I think it's a very good question, and it's related also to Conrad's previous question on debt, because we've seen a tremendous expansion of debt, and corporate debt, not just, everybody talks about the debt the governments have got and how we've got to deal with this crisis and the government debt, but corporate debt has risen dramatically in the last 30, 35 years in the major economies, and that process has been, in my view, partly because these companies are no longer struggling to get their profits up. They can't raise enough profits to reinvest using their own earnings. They raise debt. They're also, as Hillel has pointed out, these huge monopolies, if you want to call them that, or major companies, the leaders in their industry, the Googles, the Apples, the Microsofts, and so on, who also have huge debt. But they've done that for other reasons. They've done that because they use that, they don't want to spend their cash, partly because in the case of Americans, they've got it abroad where they're avoiding tax, and partly because the debt costs are so low, they can use that to buy back their own shares and pay dividends to their shareholders, drive their share price up, which means they can then borrow more. It's like a perpetual circle. But the zombie companies are the ones that are struggling to make any sort of profit. So you have an increased concentration, as Hillel pointed out, between the big companies and the myriads of smaller and medium-sized companies which try to make a profit in the system. And they're obviously, if they're in an industry where they've got one big monopoly company, then they're in trouble, because they're being squeezed, their market share is being squeezed. But also the general growth in spending and the possibilities that they've got are limited. So they're not making much profit, they're having to borrow, or they've borrowed in the past, and so even low interest rates are hardly manageable in terms of paying. So occasionally, even in the environment we have now, we see companies going to, well, I can think particularly in industries where the competition is fierce, and also where there isn't much of an expansion. It's more a traditional industry. If you take the UK, classic example would be something like Debenhams, or in the retail sector. A weaker member of the retail, it's not gone yet, but it's a zombie company, really. What was the one that just went recently before that?
BHS.
Yeah, BHS. Now we know that it was ripped by its so-called owner for millions, but it wasn't able to survive in that environment and it had huge debts. There are lots of others where there's such a big debt or a pension fund liability which is impossible to meet, and therefore they're in a position where they try to be sold off for £1 or anything. This process. Now, so as Hillel's pointed out, in this environment at the moment, in this depression, we're not getting the process of a cleansing of the system. We can discuss whether that's permanent or not, but we're not getting a cleansing of the system. We're getting all these companies just struggling on in an environment where there doesn't seem to be an end to the process of their depression and no ability to get out of it. And the risk is going to be that if interest rates start rising, which they are now beginning to do so to a little bit, to an extent, and we can discuss why that is, but if that happens, if they went, say, a company that's on the zombie level is paying 3 or 4% interest, and that will be relatively low, and so it needs at least 3 or 4% profit after paying for everything else, just to cover its interest. If we go to 5 or 6, they're going to go bust. We're going to see a lot of companies hit the wall. In my view, this could well be the trigger for the next slump that we have before the end of this decade. So the relationship between the profitability of a whole layer of companies, the big companies have huge cash mountains, but I saw a figure which showed that big companies in America, all the cash mountains that we hear about in the press, I mean, Apple this week has 250 billion in the bank in cash. But these companies constitute less than 20% of all the capital assets of American companies. The rest of the companies don't have these cash assets, or no greater than they used to be. Everybody has a bit of cash. Yes, the banks are stashing up cash on behalf of their clients globally, but it's concentrated in these companies, really. But it's still a small proportion compared to the huge amount of assets which exist, and the whole layers of companies are not in that position. So the trigger for another slump would be the zombie companies hitting the wall.
Hello, would you like to?
Well, yeah, I would agree with Michael. I'll just make 2 points. One is, in terms of what I had been saying, I left out the second point I was going to make in relation to monopoly, and that is modern production. Modern production has become very clear if you look at it, is global. But now, when it's global, it includes a whole series of companies. That didn't used to be the case, but it is the case. And it isn't just in one country. So the idea of Britain simply leaving the EU just like that is kind of crazy. It can't do it. It's just physically impossible in terms of production. It just can't do it. Anyway, the point is you then have these large chains and networks over the world. They are dominated by the major companies. So that's, I think, your outline is correct. So what it would mean is that in this chain you'll have a number of smaller companies, or sometimes small companies, which are making whatever they are, and which could well be in the position of close to bankruptcy, which are just going on. They have the companies which are buying their goods, and they have the suppliers coming to them, and it's just going on. Because it's going on, the chain is there. The chain needs them, so it can go on doing it, and they can borrow money to go on for a time. Obviously, if they go under, it creates a problem with the chain as a whole, which gives them a degree of stability for a time, but it would only be for a time, obviously. The second point about debt is, I didn't mention it because it seemed to be fairly obvious. In terms of every crisis, if one reads Marx's third volume of Capital, there's a large number of pages on finance, debt, and debt, in fact. I think the point about it is that the crisis occurs in production, it occurs for capitalist and worker, and in order to continue without going into crisis, the capitalist borrows, the consumer borrows. So for a period of time, which can last quite a long time, you can have the system going on, although there's an inherent crisis underlying it. At some point, the debt can no longer be maintained, which is effectively what actually happened, yeah. Which is why the crisis, whatever you want to call it, 2007, isn't a banking crisis, in fact. It's a crisis of the system, which is taking the form of a banking crisis. But all crises have been banking crises.
Exactly. Do you still have a question?
Yeah, so you said that the biggest three recessions have been in and around the time of war, like imperialism and the world wars. So I was wondering to what extent you thought that overpopulation was a predeterminant of the economic crises, especially because in times of war, population decreases a lot, and therefore it's perhaps easier to control the economic environment. So, overpopulation.
Yeah, it's a tricky question you raised there. Obviously, if we go way back, one of the classical economists, Malthus, argued that the reason we have crises is because there's too many people. As we know, Jonathan Swift's answer to that for Ireland was that the people with too many kids should eat them and reduce the population and also get some sustenance at the same time. As you realise, he was making a joke, a pretty nasty one, but nevertheless it was effectively making the point to Malthus and others that if capitalism, or if the only solution to capitalism is that we need to reduce the population, then it would be a fairly easy process to achieve. I think the point that Marx makes in Capital and elsewhere is that overpopulation is a relative concept. It's a concept to do with capitalism. Capital needs a reserve army of labour. By that means, as Hillel has pointed out, it doesn't want full employment. It needs a pool of labour that continually allow it to put pressure on the wages and conditions of the workforce by saying we can replace you, or we can find new avenues for expansion with that new labour. The globalisation of the world in the last 35 years has brought in hundreds of millions of people into the capitalist system for the first time in terms of industrialisation, mechanisation, and the use of all this surplus labour. And in my opinion, there's still avenues for more exploitation through the 21st century for capitalism, assuming we can get out of this depression at the moment, to exploit. There's still a few 100 million people in various parts of the world that can be further exploited, leaving aside the question of the existing workforce. So in that sense, there has to be overpopulation, but it's not the overpopulation that Malthus meant in the actual number of people. That depends on that is actually driven by the expansion of capital that we've seen, the rise in the population, and that it's perfectly possible for human social organisation to cope with the existing population. That's not the problem that we face, overpopulation in the strict sense. What we face is the inability of capitalism to provide decent conditions for all and employment for all if we need it, and therefore, and the reduction of hours and times of toil on the basis of using forces of production. So I think we should we should dismiss the argument of the Malthusians that we need to look in this direction of a solution, because we get it from ecologists, don't we? Or we did in the past, in my day. When the capitalism was booming, we were told that the problem was that people were starving because there was too many people, and we need to control the population. Stop growing is the line. The no growth thesis of argument. If we stop growing, and there's a certain truth in it, if we stop growing, we'll have less carbon emissions, less global warming. The biggest fall in carbon emissions has taken place since the recession of 2008-9. There's a Marxist economist called Jose Tapia Granados who's done excellent research on this, and he shows a complete correlation between the movement of carbon emissions in the world and the expansion or contraction of the capitalist production system globally. We know why. The rapacious drive for profit and industrialization, expansion of the coal industry, which McDonald's going to renew, and so on, leads to the rising carbon emissions, and therefore the crisis we get on the environment. But the ecologists who look to read what Marx said on this, but the answer is not trying to control growth or bring it down when there's people who are for nothing. It's not the question of reducing the population by eating babies. The question is that we need to change the system which aims at profit rather than meeting the needs of people.
I didn't catch the question.
The question was, is overpopulation the problem that we face?
Oh, well, I think you've answered it.
Michael's position seems to be that there is a possible way out of the crisis for capitalism. Basically another slump, which I presume would mean quite a big defeat for the working class, because you have mass unemployment, you have a situation where trade unions might be smashed, etc. That's a possible way out for capitalism, that if the working class doesn't manage to defend itself and move towards socialism, capitalism can restore itself. Hillel's position seems to be that's ruled out. Capitalism's at a stage now that we're in the last crisis. It might take a long period of time, but we're not going to again see a period of boom for capitalism where you've got full employment, etc. You're going to have a position that we've got a long period for the working class to try and organise itself, admittedly not in the best conditions, because as we know, if you're living in a situation where there's underemployment or there is mass unemployment to a certain extent, that for the working class to organise itself and fight, it's a difficult situation. In terms of the origin of the crisis itself, your position is, as far as I understand, I've got the book, but again, one of these people that haven't managed to read it yet.
Well,
right? But
Piketty's book is the most unread book that everybody's got. I think Sheikh's book, by the way, is going to join that, because that's 1,000 pages. Luckily, mine's a bit shorter, so I hope they'll join that back.
Your position is that to follow the rate of profit is the essence of the Marxist, but that's what causes the crisis. Hillel disputes that, as far as I can see from his contribution. Another thing I read, monopolisation taking a very important role. The reason that the capitalism the capitalists are not investing and they're just keeping money in the bank, that it's money rather than capital. The reason they're not investing is that they control the market and that there's no reason for them, because they're not really facing any competition, so they can judge what they're going to sell, etc., and they just go along in that position. No need. My question really is related to, well, what about the move towards the nationalism that we do see? Okay, we see it amongst the mass of the population, it can, but also amongst the elite, the capitalist class itself, there is a move towards nationalism. Obviously with Trump, etc., we can see that. Are we in a position where the monopolies that do exist are going to have state backing, and there's going to be an attempt to remove certain monopolies, right, the other nation's monopoly, and try and create a new cycle of investment on the basis of national conflict? Is world war a real possibility or not, I suppose?
Okay. Yes, it's a logical question. I think it's highly unlikely that there'd be any meaning for a world war, because you're talking about now a world war which would not be based on ideology, although in fact the difference between the Soviet Union and the United States wasn't really on ideology. and there weren't the same differences as they officially proclaimed. However, I can't see the basis of the thing. I mentioned networks. That's the nature of capital today. Capital is international. It's a paradox that capital is highly international and the working class at the moment tends to be national rather than international. But although obviously we'd argue in terms of the inherently international basis of the working class, nonetheless, that is where we are. America does rule the world. It is the overall controller of the world economy. It's not doing it just as some sort of person who throws the dice on a monopoly board. The fact is, its companies are embedded throughout the world. These chains of production, manufacturing chains, largely relate to the United States, not entirely. Obviously, there are German firms, Japanese firms, Chinese firms, and so forth. But basically, those international chains are American. Mm-hmm. They can't easily just break them. If they break them, they break themselves. It doesn't make sense when you mentioned the computerized ones, effectively, like Google. Yeah. The last thing Google wants is to have a competitive Google. Yeah. It's highly unlikely that a large section of American capital is going to go along with this nationalist line. They clearly are not going along with it, except in form. You must have read the absurd example of Ford and Mexico, no?
Yes.
Yeah, well, Trump actually gave the example of how he'd been effective in getting Ford to move its plant from Mexico up to the United States. In fact, what happened was that Ford was going to put up a plant and spend $1.6 billion on this plant in Mexico to produce Ford Focus. But it decided that demand for Ford Focus had gone down so much, it wasn't worthwhile doing it. But they announced that Trump had convinced them that they should not invest in Mexico, so they weren't. Instead, they said they were putting $700 million into some plant in the United States, which it turns out they were going to do anyway.
Yeah.
Now, the same has been true of a number of other companies where they make up stories, effectively. So far, that's been the case. It's very hard to see how they are going to simply give up their role. In fact, they can't give up their role because it would be worse for them, but it would be worse for capitalism as a whole, as far as they're concerned. Because what they then be doing is clearing out of the system in other countries, which would tend to weaken the capitalist class in other countries, obviously. And the system itself is working as a global system, not as a nationally divided system. And you could read Martin Wolf's stuff on this. So probably some of you may have done that, in which he argues on the basis of bourgeois economics, and more or less accepting that they are going to do it, and points out the problems of it. The problem with his argument is that it's based on comparative advantage, which in fact is not a correct description, obviously, of the nature of what exists or what could exist under capitalism. However, the point is that the capitalist class in general is opposed to what Trump is talking about. It might go along with bits and pieces of it, but it's unlikely to go very far with it. It would be a kind of gift to the other side on one level, because it would lead to increasing chaos, which we already have, of course, as in the Middle East, where they went in there with a ridiculous doctrine and ended up in a complete mess, basically, which is what happened. If you remember, I'm not going to go over it, but the point is it would be chaotic for them to continue with it. Okay, if we imagine they do continue with it, the likelihood is that it would begin to play into the left, because they would lose control.
Well, first part, I think, are we heading for wider international conflict? Clearly, I think I'd like to use the example that Hillel brought up. When we got to the end of the long depression of the 19th century, he said that imperialism ended that long depression. In my view, that's not. I wouldn't entirely agree with that. I think a series of slumps created the condition for an improvement in profitability amongst the major economies. They did. They were able to apply, particularly in Germany and other countries that are catching up, the new technology to take them forward. Britain, which is the hegemonic power at the end of that 19th century, was losing its position relatively and eventually absolutely. It was the dominant hegemonic power before that long depression. At the end of that long depression, it was in a much weaker position. There were rivals, and they had a new spurt of capitalist growth, colonialism and imperialism as well, but also expansion in Germany, Japan, France, and so on. New powers came on the scene, and of course, above all, one other big power, the American capitalism, with its industrialization after the Civil War and onwards up to the end of the 19th century. This was a huge new expansion, that expansion also created rivalry between the major powers, particularly the ones that were new on the scene without colonies, like Germany and Japan, against the older ones like the UK and France. And the First World War was a struggle of imperialism over why haven't we got a share of the world cake, and that was why it became a world issue and not just a European one, because of the nature of the development of imperialism at the end of the 19th century and into the 20th century. But capitalism did make recovery on the basis of improved profitability and the creative destruction process. In the moment we're now in, we have a similar situation in a way, in that we've had globalization. We're now in this depression. The profitability is down. The big hegemonic power is now facing the prospect of rivals abroad, whether it's Europe to some extent, and we've seen the development, Japan to a lesser extent, but of course, above all, China. Trump sees China as the terrible enemy, not Russia anymore, who's only got oil. Maybe Russia is even an ally against the real enemy, which threatens, in his view, the hegemonic position of American capital, which is relatively weaker than it was in the period of the 60s and before the beginning of the neoliberal period. It's lost its overall complete domination. Pax Americana is over. It's still the dominant power, as Hillel says. Its companies are still the biggest and most important, but they have rivals everywhere. Google has a rival. It may not be in America, but it's in China. So does all the other companies. They're rivals that develop. And that's what I think about imperialism. It's not just monopoly. The competition, the competitive struggle of capitalism continues and has always been there. From the beginning of capitalism, it hasn't been pure, perfect competition. It hasn't been monopoly. It's been real capitalism, a combination of two things: leading companies gaining monopoly share or the control of that market until it breaks up with new rivals coming in, or through a crisis taking place, we have a new situation. We're seeing that now, where we have new rivals on the scene. We'll see new companies. Google, Microsoft, all the rest never existed 30 years ago, or even 20 years ago as forces. Facebook, Uber, when the next stage, the driverless car monopoly. There are all new developments taking place dynamically. Now, capitalism cannot really take advantage of that unless it can create the situation for further profitability to take itself forward. But the conflict's there. I don't think it necessarily ends up in a world war. The 19th century depression did not end up in a world war immediately. It actually ended up in a growth of capitalism. The epoch at the end of the 19th century and to the early 20th century was a period of actual growth for a while before we moved to the conflict. And The Great Depression, you could argue, ended up in a world war, and so it's a possibility. I would say, and taking your point here, that we're not entering a period where there's stagnation, where things just carry on indefinitely as they are. As Marx said, there was no permanent crisis. That we go through a period of convulsions which will create a new situation. Now, that may be in favour of the working class or not. But if it isn't, then, as you say, we'll either have a new expansion of capitalism with increased conflict and rivalry, or we can have something even worse, which is a collapse of the capitalist system to the point where everything goes down really badly, and what we used to call barbarism, which is actually just a reduction in the level of technical ability to take the productive forces forward at all. I think the former is more likely.
If anyone has any other contributions, questions, and then we'll just come back and give each speaker 10 minutes at the end to sum up, and then we can call it a day. So, we'd like to kick off.
Just going back to Michael, one thing about I mean, are you arguing that the trigger for the crisis is the fall on the rate of profit, right? And the second point is, are you stating at the moment from your research that, you know, say that in the big monopolies, has there been a tendency for their rate of profit to fall, or is it the average rate of profit over the whole economy where they are in the position where they can hold on to their profit because they're a monopoly and they control the supply chain, and therefore they kick it down, further down, and it's the smaller companies that are relying on it that are actually in the position of either being zombie companies or having a very low rate of profit. So I just wondered if it's an average rate of profit and how that allocates between the monopolies and the small companies.
Yeah. Well, I don't think it's a trigger. I mean, a trigger, I think we have to recognise that there are different levels of analysis here. There is the ultimate underlying causes of crisis, which Hillel also pointed out. And I think the key one is Marx's law of the tendency of rate to profit to fall, and the movement of that, in reality, whether it's up or down, over periods of time, gives you an idea of the health and strength of the capitalist economy, and whether, for capitalism will have booms and slumps anyway, because of the movement of fixed investment and the anarchy of the crisis and the level of pressure that the class is putting on wages and profits. But and these booms and slumps can be relatively shallow in periods when there's a general rise in the rate of profit. We saw that in '87. The stock market crash was huge, but it had little effect on the real economy. Because the rate of profit actually in 1987 for most of the economies in the advanced world was high and moving upwards from the lows of 1982. When I say high, it was moving up from 82 anyway. It was still lower than it was in the 60s. But so that able to overcome these stock market crises and shocks that you take place. There can be various triggers: a stock market bubble, a property bubble, as we got in 2000, a credit and financialized version of that because of the derivatives and the banks being involved in taking property and mortgages and turning it into a debt that could be bought and sold across the world, created a bubble. But the underlying process of profitability decides the issue of how deep that crisis will be, and it was very deep in the Great Recession. So that profit is an average rate of profit, as you say. So it depends on taking all the big companies and all the small companies, as far as we can measure them, and having an average. That gives us a general idea. That's what Marx did in Volume 1 of Capital. He said that the average rate of profit is what we have to understand for the underlying process of value production and the accumulation of capital. We'll see that there's a tendency of the competitive struggle between capitalists, even with monopolies involved, is towards trying to get, if somebody's got more profit than they've got, then they look to move into that sector. And this drives everything towards an average rate of profit. You never get to it because it's always moving. So there's an average rate of profit we can measure, and that gives us the general guide. But within that, there are companies who are increasing their profit rates, or have much higher ones, and there are companies that are collapsing. But on average, we can tell. If we get to a position where the average rate of profit is falling at a pace which leads to a fall in the mass of profit, I think Hillel mentioned before that actually if you look at profit margins, which is the amount capitalists are making relative to the wages and costs they've got, not to their overall fixed investment and so on, profit margins, they've been very high in recent periods, although they're coming off now. When you get in that situation, then the capitalism will still go forward. It's when profit margins and the mass of profit starts to fall in particular that you get the slump. The trigger for that can be all sorts of different things: stock market, property, corporate debt, maybe in the case of individual countries, a run against that country and its assets are moving out, could cause a crash there. Maybe that would spread elsewhere. All these are different. The Great Depression kicked off with a stock market crash. This depression kicked off with a property market and credit crunch. The 1873 crash was, as I remember, again a production crash in some of the new industries like railways and so on, which took a big slump, particularly in America. And all of these, as Hillel says, they are expressed as a banking crash, because the banks have lent all the money to these people, they no longer pay, and the banks then take the hit, and the run is then on the banks. Every crisis is a financial crisis in that sense.
I wonder if I could come back. Just a quick one. I mean, that seems to suggest that you could have a falling rate of profit where the monopolies are actually increasing the rate of profit at the expense of the smaller companies. As we know, some of the big monopolies, Tesco's is one often, or the big supermarkets, put real pressure on the supplier because they know what their profit rates are and they know that they can drive a bargain because they control the market. And if it's the situation then that you could have a situation where the monopolies, their profit rate is not declining, why are they not investing then? Is it the situation, the reason that they're not investing is for the reason that Hillel suggests, and since they control the market, there's no necessity for the invest, they know what they need to produce, and they're not under threat because of the barriers to entry. So it's just that, that's all.
I'll come back on that one.
Well, I just wanted to reply something which you said previously in relation to what happened to Britain as a declining power. You were using that as an illustration of what could happen now. But one has to be clear what happened then. What then happened, as you know, was a vast export of capital from Britain. And the returns were vast coming to Britain. It virtually supported Britain until the war. So there's no question of what actually happened and the tremendous role of imperialism in that period, bringing it out of where it was. Remember, the export of capital at the time did two things. First, the investment didn't have to go into Britain, it went elsewhere, and then it came back and raised the overall rate of profit in your terms, but raised the overall flow of capital. So there's no problem in explaining what happened as to what, in relation to the possible existence of a downturn or a crisis. Effectively, after then, between 1893 and 1914, there was no crisis. But some people, probably most, argue if not for the war, there would have been. But in fact, there was a war, so there wasn't. Anyway, the reason I've raised it is simply because I was arguing that overall the stability of capitalism has been maintained fundamentally by imperialism and by war over this period. And the Cold War, in that respect, was together with the welfare state in the period after 45, was crucially maintaining stability. So the logic, therefore, is to ask what is now maintaining stability. They're reducing the welfare state. We have mass unemployment, and they haven't got a Cold War. And it's hard to see what the basis of a Cold War could be, because however correct or incorrect it was, they can't duplicate it. So, in other words, the stability of capitalism today cannot be there as far as I can see, judging by the last century. So, the second point, or I'd make is regarding the hegemonic power. Britain was the hegemonic power in that period, and it was that through direct force with an army in numerous countries, ensuring that it maintained its presence. America has an army, but it's not using it for exactly that purpose, although when it requires, it has used it. It's not clear whether it will or won't use it right now. It might. What Theresa May was saying seemed to be that they shouldn't use it or something like that. I'm not clear.
Neither she.
Neither she, yeah. Exactly. So, however, it not only has an atom bomb, which in fact is useless because it can't really drop it, but it has an enormous army with weapons which could wipe out any two countries at any time. And that remains. It's not going to change it, and it will maintain it. Well, Trump is maintaining it, in fact, threatening. So I don't think, although I agree completely, it is in decline. Capitalism is in decline. It's not, what I'm describing isn't just an incident in capitalism. Capitalism itself is in decline. The law of value itself is in decline. So if one's talking about what it can do, it is limited and increasingly limited, and that's bound to be the case. But there is no other power. And I'd say Germany can't take over. The EU is still fighting itself. It can't take over. Japan's in trouble. It's unlikely to be China, even though it is growing. So it doesn't seem to me that there's any change, and that it's highly unlikely that we are going to have another nationalist war, which is at least one form the two world wars took, although it wasn't wholly that in the case of the Second World War. So, in fact, I don't think there's any need to worry about it.
Another question which is kind of related to that. So, Michael said that there are still areas of the world yet to be exploited.
Yeah.
And given that capitalist America lead the way of the world, do either of you think that economic systems can survive, or would you expect corporate America to villainize other systems, for example, Trump and China, and thus try to conquer them?
Well, it's a sort of follow-up to what Hillel just said. Let's see if we can get a difference here. If I can delineate it. What I understand Hillel's saying to me is that US stays as a hegemonic power. Imperialism and war has actually enabled capitalism to avoid the end. The idea of creative destruction, the replenishment of the rate of profitability through slumps, is out. That model, which Marx might have presented or didn't present in Capital in Volume 3 and so on, as a theory of crises, is no longer relevant to the 21st century. Because since 1870, what has kept capitalism going is imperialism and war, and the role of the state, the welfare state, and so on, after the Second World War. These things have enabled capitalism to get sufficient profits to stabilise the situation and to continue. Of course, people have died, millions of people have died in wars, but that's how capitalism is. And that's going to carry on. Capitalism is dead in its essence. The classical model of boom and slump and creative redestruction of capitalism going forward after another period of slump is over. We're now in a period, if you like, Hillel will tell me this, of stagnation if we're looking at the economic system, but politically what's happened is they've created an environment by which they can just stagger on indefinitely unless their class overthrows them. We won't necessarily go to another world war, as he says, but we'll continue with imperialism, and we'll continue with not producing and investing in order to keep the profits up, and that's the way it is. Well, I don't see it that way. I think that the classical model, if you like, or what model Marx said in Volume 3 of Capital, written in the 50s and 60s, 150 years ago, is still the model of capitalism, in my view. It wasn't a perfect competition model. It was a real competition model. It combined monopolies and smaller companies. It was never perfect. It was never monopoly. Monopolisation, in a sense, has increased, but only to the extent of creating international rivalry at the international level, because through globalisation, capitalism, 150 years later, is now truly a global system. And increasingly, we can talk about a world rate of profit, which Hillel mentioned in our opening remarks. We can even attempt to measure it, which I've done and other people have done. So we can begin to see the process, and I think the evidence shows that the same process of rising periods of profitability, where capitalism has a bit of spurt, and then a downward period, creating eventually severe depressions, is still applying. And therefore, the short answer to your original question is that this depression will come to an end. It won't go on permanently under the auspices of monopoly imperialism. It will come to an end, possibly through a series of slumps, maybe one more, maybe, I don't know. But that create the condition, if you want to call it creative destruction with not capital values to create a new environment. There's lots of new technologies now bumbling around, as we know, in biology, in data processing, big data, in driverless cars, and all the rest of it. All these technologies have hardly been used yet because capitalism is not in a position to expand them. They're only being done by the techie people. Nobody else is really using them. I know Amazon's about to fly drones through our windows to deliver our small packages, but all this is early days. Now, capitalism really can't take us forward indefinitely using the technology which will make our lives better, but it may get another spurt to do that if it creates the environment for it. And there is plenty of people still to exploit. They haven't, even though it's globalised, even though it's imperialism, even though it's big monopolies, there's still huge amounts of surplus labour, in my view, that can be exploited. The law of value is definitely in decline, but it's not gone, it's not dead. There is still ability to create more value by exploiting us, and there's still hundreds of millions of people available to do that if capitalism gets the opportunity to do that. I hope they won't, but there's every prospect. So you could say, on the one hand, I'm an optimist for capitalism, and Hillel is the pessimist. He's the optimist for the working class, and I'm the pessimist for the working class. In this, you could say, if you want to put it so we can have a sharper difference and see where that leads us.
I'm slightly surprised by it. We've only mentioned the developed world. The fact is, the situation in the third world almost couldn't be worse. If you look at what's happened in Brazil, in South Africa, the real situation in India, millions of people really have trouble feeding themselves.
Yeah.
So the question isn't of more people being absorbed. Several billion could be, and that's been true for a long time. The question is why capitalism wasn't able to do it before. And I can't see any reason to assume that it will do it in future. We are, instead of getting any kind of rapid development in the third world, it's just bumping along the bottom, in fact. The situation is drastic in many countries. Yeah. The problem, of course, is you can't build social in one country. You can certainly not build social in an undeveloped country, which is what creates the double bind, as it were, for people in the third world. But,
Yeah.
But that is the case. That is where we are today. The exception, of course, is China, which has actually used the state in this, you call it a new way to combine the state with private enterprise, which has actually worked in actually developing industry. But the fact is, as far as I understand, it's something like up to half the population is still on the countryside. And part of its problem, as I understand it also, is that they were building whole towns without anybody moving to them. That seems to be a the overproduction of a particular kind in the infrastructure. Seems to be a phenomenon of Stalinism. That's what happened, not the same way because they didn't have the market,
Yeah.
but nonetheless, the famous example in the Soviet Union was of the way they would constantly put up new factories. And that was because when they had a new invention or a new production line, instead of putting it into the same plant, they built a new plant.
Yeah.
That was in the nature of Stalinism at the time. But it seems to run in parallel with what's happening in China. Anyway, the point is that obviously China has developed, but unless it moves to socialism somehow, it is going to find increasing trouble in the West. So I don't see any kind of solution in the world that you're referring to. Simply, where are they going to go now? They're not investing. Why should they invest? That's true, of course, it was true during the Great Depression too.
Yeah.
So why should they invest? To say that there's new technique, of course there's new technique. There's always been new technique hanging around within capitalism. The question is whether they can use it,
Yeah.
whether it'll develop any further. That's not at all clear. So it's then too, the fact is we now have mass unemployment, not just in the third world, but in the first world. De facto mass unemployment, which they declare not to exist, of course. So the question is whether they're prepared to absorb it, and the answer you agree with is effectively no. They are not going to go to full employment.
No.
Well, if they're not, then how are they going to expand? Because if they're not going to employ more, unless what you're saying is they're now going to go for massive investment in automation, but then that would lead to your argument to a rapid decline in the rate of profit.
Yes. Yeah.
Well, they're not entirely stupid. So it doesn't seem to me they're very likely to go very far with it if you do get a decline in the rate of profit. In fact, of course, one has to ask how over 100 years that took so long to get to automation. I don't think anybody's really posed the question properly, but so if they are afraid of doing it, which they are today, and what they do is not simply abandon capitalism and go live in a cave. I'm not suggesting that, but simply maintain investment at a lower level than, a considerably lower level than is possible, maintaining the real level of unemployment. Then we can go on like that, or capitalism can go on like that for a considerable time until the working class is able to act. It is theoretically possible that the capitalist class at some point will realize that if they continue the way they are likely to be overthrown. I don't know, but I can't really see what you're talking about, because they're not proposing it. They're not proposing to go on a boom. They're very clear they are not going to go on a boom. They don't want the state to be involved. The other point that I'd make is that, which I presume you agree with, because the basic argument of socialists isn't that there's going to be a revolution, although all socialists accept that, but that there is increasing socialization of production, and so of society as a whole, which exists within capitalism already, and will continue to do so. So that in theoretical terms, we could say over 300, 400, 500 years, the society would be so socialized that it would only take a very small effort to overthrow it. But that already exists. And it's creating anomalies which are not regarded as such, but very obvious ones, and the most obvious one in our society being the NHS, which cannot be run by private enterprise. But the same is true of education. You can go through all the others, which there's no point in
So-called
repeating
public
it.
goods.
Yeah, exactly.
Yeah.
Yes, but it increasingly applies to everything.
Yeah.
It just keeps expanding. It's fairly obviously true of housing, and you can just keep on with it. So, so that's already there, and it is creating a crucial contradiction within the society itself, which is expressing itself one way or another, and is going to increase in its intensity. I don't think we can avoid that point.
I was going to talk about decline, which we both seem to agree on. I think the interesting thing for me in terms of what you're saying about mass unemployment in the imperialist countries, of course, is what they've generally done, of course, is because of the nature of the development of the labour process, is of course they just create a surplus population, which doesn't actually have any bearing on the nature of certainly of skilled labour, and so on, which is actually excluded in effect. I mean, chunks, you can see it in Glasgow, quite obvious, chunks of the population are effectively marginalised from participation in labour, over generations. And it's an extraordinary process. And the other thing, of course, is in terms of just, Hillel's talking about socialisation of labour. I mean, the big international example, of course, is internet. It's not, it's actually it's counter to capital itself in many ways. I think the real point, it seems to me, also is in terms of the role of Stalinism and how that contributed to the stabilisation of capitalism after the Second World War and through to its own collapse, and the effect on that on the left. I mean, some of us have been sitting here. I mean, you can see here, this debate, I mean, this should be central. I mean, this room should be full of people, really, especially in this city, because this should be a central question. Well, what is going on and what the hell are we going to do about it? Now, you can see that the left is in decline. Unfortunately, with the collapse of Stalinism 25 years ago, firstly, what do you see as the impact of Stalinism? And secondly, is there then any move forwards in terms of regeneration of the left? I mean, probably we're stuck with the same old organisations, most of which actually are in destruction and know nothing and promulgate ignorance and stupidity and bureaucracy and basically are slowly collapsing, but nothing new has come along.
Well, shall we make this a concluding
your subjects, I think.
Shall we make these the concluding remarks as well? Because time's getting on.
Okay.
So
Sorry?
make these the concluding remarks as well.
Concluding
So,
remarks, okay.
10 minutes or so each.
I think Matthew has correctly brought up the question of Stalinism. I think it is true. The reason we are not in socialism today has a lot to do with Stalinism. I think it's also true that as a result, it's been very hard to form a genuine left. It's clear that many people in the working class have been put off the left as a whole and don't see what the effects of Stalinism was. It's also clear that in the Soviet Union, the former Soviet Union, Stalinism was sufficiently effective to ensure that there was no left-wing movement. It's actually amazing to think of it, but there is no left in the former Soviet countries, which is what you might not have expected. But it has been extremely difficult to form a mass left-wing movement. And it clearly is the case that Stalinism played a role in making the left appear to be awful, but also in destroying the possibilities for some time. I'm not at all clear how to get around it. The hope one has is that the further that one is from it, the less it will influence events. And that was something, of course, which was said in the case of the election in the United States with the support for Bernie Sanders, that people were very surprised that young people were attracted towards socialism, when for so long in the United States socialism was associated with Stalinism. So that does give some hope, as it were. I'm sure that it will be overcome over time, but it's taking a lot longer. I think it's partly for emotional reasons. I've been very surprised myself at it, because I found that when mentioning Trotsky to people who were in the Soviet Union, you would get a spontaneous antagonism to Trotsky, even though they never read a word that he'd ever said or ever had read any real discussion of it. And I couldn't explain it intellectually because it wasn't there. It's simply an emotional antagonism. And I think that's true. It's true in this country too, for people who were on the left, but weren't, of course, themselves Trotskyists. It's very hard to get through to people who have, in effect, been indoctrinated, whether by Stalinism itself or by the state. So it's perfectly true. That's I do agree that Stalinism, in its ideology and in its control, has set the world back. But Stalinism itself doesn't come from itself. It comes from what amounts to the defeat of the October Revolution a century ago. Stalin was its epitome in this most awful form. So we have to, as we look at it in a more general sense, that the working class was defeated over this period, and we have to recoup. So if we then look at the present context, I think that is the exact context, and Matthew's right to refer to it. Because if we look at the world today, one would have expected a left-wing movement which was very much stronger. Or put it absolutely, we would have expected a left-wing movement. We just don't have one. It's a dire situation in that respect. We virtually have to start from the beginning. During the 30s and Stalin's period, the Stalinists were very successful intellectually. They produced a whole series of books and bookshops and things. We had the Left Book Club, which it did actually work. You got a considerable number of people who supported them or supported socialism. That's completely absent today. I think ideally one should be able to get together whomsoever in order to help start something, but it's hard to see it. I think that's true. So what this amounts to saying is one of the reasons, or the fundamental reason why the world is where it is that there is no left. The bourgeoisie doesn't have to worry about the left at all. So why shouldn't they have mass unemployment and call it full employment? Why should they reinvest, as it were, to build anything? Just be safer in what they're doing. I think that is partially true. Clearly, I don't agree with what Michael was saying about monopoly. Obviously, he doesn't agree with Lenin, so or Hillel Ticktin. Not that it makes him wrong, but I'm just trying to get clear what the point is. I think monopoly is the absence of competition of the 19th century kind, if you put it like that, or of the kind that Marx actually describes. It's not just the absence of perfect competition. It does allow the capitalist class to control the speed or the extent of any upturn. And today we have finance capital which is in fact in charge. I gave the example of a few firms being in charge. That's very clearly true. So the idea that they'll go into some sort of position of losing control is highly unlikely. That they will reinvest and the thing will go slightly up and slightly down, I think is true, is obviously true. I wouldn't bother to call it an upturn or a downturn. We're just bumping along the bottom, and I think that's what is going to go on. Sometimes they'll be just above the bump, and sometimes they'll be below it, that's all. There's no reason to assume anything else. They clearly understand what could happen if they were to reintroduce higher levels of employment or a degree of security for people. And it's quite true, it would. You can't assume that people are completely insensible. So the logic, it seems to me, if you put it like that, since you started off with Stalinism, is that we can expect, even if people are not all that deep, we can expect a movement towards socialism, which will have some sort of meaning. Whether it's going to be in my lifetime is another question.
I should try to be brief, which of course usually means when the speaker says that he isn't. But let me put it this way. I like to look at it in a time scale. In my book, I try to say, obviously in a far too crude a manner, to suggest that the movement of profitability gives us a key to what's going on, not only with the world's capitalist economies, but also perhaps the political repercussions of that. In my earlier book, Great Recession, I had a chapter about the political impact of the rate of profit, a rather controversial chapter which has scourged the world. I've always forgotten what I wrote, or even read it in the first place. But in there, I'm arguing that it actually does, that the movement and the waves of profitability that I described do make a difference politically to what's happened. If we look at the period in the post-war period, we can divide it into four in terms of profitability. Immediately after the Second World War, profitability was high after the war. Capitalism was in a position to expand. It had loads of surplus labour in Europe, Japan and elsewhere. Thanks to Stalinism, that labour did not organise to overthrow the capitalist system after the war. There were moves in various countries, in Italy, Japan, everywhere, particularly in southern Europe, against capitalism. And there was a strength in the labour movement. Soldiers came back from the war and they said, no, we're not putting up with what we had in the Depression. We want full employment, we want trade unions, we want a welfare state. And capitalism was able to concede that reluctantly because they were in a position where they had a reasonable level of profitability, they had state support to invest, they had a big hegemonic power with lots of cash to help credit through the Marshall Plan and elsewhere to take the world economy forward. So we ended a period of what we call now the golden age, where profitability was very high, Full employment, no, not really, but very low unemployment rates in most of these countries, and an expansion of growth, where growth was growing at 4 or 5% or even higher in the countries like Germany and Japan. I mean, 4% now is Trump's golden target. In those days, that was normal, even for Britain, 4% a year on average. 6, 7, 8% was more likely for some of the other countries. But that period came to an end because profitability started to fall, according to my calculations, from about the mid-1960s, not my own, but everybody else's too, down. And we had, first of all, the first worldwide economic slump in 1974-5, triggered by the oil crisis, but underlying that was the fall in the rate of profit. The first international simultaneous recession we've had in the post-war period, probably actually forever internationally in terms of its impact. And then, with the recovery after that, we then had a very deep slump in 1980-82, which affected all the major industrial economies, and profitability fell to an all-time low. Now, what was the response of the ruling class? As Hillel's pointed out, it was a massive move away from the welfare state, away from the costs that labour was making for it, cutting unemployment, a creative destruction of industry, and its replacement in other countries, not only their own, but moving forward to try and drive the profitability up. We had political leaders, Thatcher, Reagan, saying that the aim was to get profits up and to destroy the welfare state, privatise, weaken the strength of the trade unions. We entered what we in the academic Marxist circles called the neoliberal period, which was basically a period. And what happened then? Because I remember we had 1980, but the Pyrrhic moment in Britain was the miners' strike in 84-5, that defeat. Printers' strike too, that defeat. The new technology. That was the end of the ability of the class to fight this battle. And we entered the neoliberal period, and a series of, on the whole, they lost every battle that was mattered through that period afterwards. And that period meant that the rate of profit could rise, there was globalisation, another counteracting factor, a whole series of things went on. Politically, we had apparently a move to the right with Thatcher and Reagan and so on, and the weakness. And what happened to all our left groups that at least people of my age were in at the time? They just went down. The objective position was against them. Then they used to argue amongst themselves about why that was. It was your fault. It was your fault. Or you wouldn't do that. But yeah, possibly, the level of the individual or the level of a small group, that was the case maybe. But it was the objective situation in my view. And that's the point of my book in a way, is trying to say, look, this is the objective situation. It's not an environment where revolutionary left are going to become mass parties. Their chance had gone, if you like, between the period of 64 and 80, when it was revolutionary. Everybody was involved, and we had left movements. Ben nearly took control of the Labour Party, let alone Corbyn. Ben was in control with the trade unions back in nearly, as we know, down to 1 or 2 votes made the difference in the period of the 70s. So, but in the 80s, that was not the case, and we ended up with Blair. We've got John Smith, but Blair into the 90s, Clinton into the 90s, the peace dividend under Clinton, so-called, but basically it was an environment where capital ruled and the profitability was driven up. But it doesn't last forever. And the rate of profit began again to slip. It was still relatively low to the golden age. From 1997, my calculations and others, certainly from into the first decade, it started to slip. The response of capital was to resort, as Hillel said, before that, to finance capital, to expand financial capital, to go into credit, to speculate in the property market. And would say, there may have been monopolies then, and there were big monopolies then. We like to talk about Google or something like that, but the monopolies were there since 1870, if you like. But it didn't stop a crash, did it? Monopolies did not stabilise capitalism at a low level. We had the biggest slump you've ever seen since the 1930s. And I would say that we can analyse that from the point of view of what happened to profitability. That was the situation which created the conditions by which the speculation in the property market, which led to a huge credit boom, an expansion of finance capital we've never seen before, suddenly went down into a big hole. Because it was like the road runner going off the edge of the cliff. And I'm racing up there, and suddenly there's nothing beneath it. Well, the emperor has no clothes, and all the other analogies you want to use. But basically, it was fictitious, this capital accumulation, and it collapsed. And we went to the period of depression. What was the response of the labour movement? Well, we're depressed. Unemployment rises, the ability to organise is limited, already the left is weakened. All the left groups have turned into cults, if you like. I'm being that unfair, I hope there's no members of them here, or I should be in trouble. But all the groups turned in on themselves, and there appeared to be no way in which they could expand in this new environment. And on the whole, that is still the situation, on the whole. But what we have missed is a change. The old organised social democratic and communist organisations have disappeared in their ability to hold the eye of the masses, or even the organised sections of labour. We've seen new lefts, haven't we? Whether it's Syriza, Podemos, what you call Grillo left, I don't know, we'll see. A different mood outside the existing organisations to some extent. The trade unions are very much shelled in many places, and so we've seen these movements which are an expression that the class struggle continues, guys. You know, I don't think the class struggle's over. But the environment is still not great for a mass development. But the phenomenon of Corbynism, the phenomenon of Sanderism, if you like, it expresses that the class struggle is still there. There's still elements that wish to see, recognise the role of capitalism, what this is causing. Of course, we also see the development of nationalism and other sorts of more right-wing alternatives that are being presented to the class as the explanation for their crisis. But until this depression ends, in my view, we won't see a dramatic change in the class, in the ability of the class to organise. What's the best environment for the class? The working class, which is now stronger than in size ever before. It is the confidence that they're not going to be out of a job immediately, that they're able to organise to some extent in an environment where capitalism has to concede. Which areas of the British working class movement at the moment can actually take that position? There is one, we see it every day. The rail transport unions are still temporarily and have been in a position where they're sufficiently confident that they can take on their employers and sometimes win, or force concessions and so on. Driverless trains are coming, so we'll see how long that lasts, but there's not many sections there. But if we're in an environment where employment's better, where wages are more solidified to some extent, like the period in the post-war period, or the period, I would argue, prior to the First World War, then you get the development of new organisations, mass unions in the case of the 1890s and so on, and maybe further down the road we're in that position. And only then can you start talking about the possibility of the class taking on capitalism if it goes into another downswing. So that's a temporal view. And in my book I make that prediction. It's probably just as much balls as anything else, but at least I'm trying to present it on the basis of evidence, and therefore you can consider it on the basis of evidence, and you consider it, and it will link together, in my view, a view about whether we're in a position to see a movement forward, so that, say, after I'm gone, and the comrade at the back is the only one left, probably looking at the age group here, then we will see a room filled of tens of thousands rather than 10.